In general, I think a lot of people would like to get into self-storage. It's a great industry, and it certainly has demonstrated strength and resilience through the pandemic and coming out of the pandemic. But what I will say is that entitlements are taking longer. Availability of materials and labor is somewhat scarce, and the cost of materials and labor is making it more challenging.
Joining me today is Fischer, President and CEO of National Storage Affiliates. How would you describe self-storage fundamentals for the industry and for NSA at this time?
Well, I would say self-storage fundamentals for the industry and for NSA have never been stronger. We continue to run at historic highs. Occupancy remains strong as consumer demand remains strong. We reported occupancy at the end of May of 94.8%, about 140 basis points higher than the last reported occupancy numbers at the end of March. As I said, consumer demand continues to be strong, and so for that reason, it gives us more flexibility in running street rates up a bit. So our street rates are up double digits, and we also have strength in pricing power in our ability to raise rents on our existing tenants. So on the whole, I would say that fundamentals have never been stronger. We feel very optimistic heading into our busy season this summer, and I think we're in good shape, and I think the sector itself will continue to show its strength and resilience.
Can you give us an update on the progress NSA has made in terms of digesting $2.2 billion of assets that were acquired last year?
Yes, of course. As you said, we acquired $2.2 billion of assets in 2021. About half of that we closed in the fourth quarter. And so we've been very focused in this first 4 or 5 months on integrating those assets and realizing some of the embedded value in the assets that we acquired last year. So we're off to a good start. In the end of 2021, one of our largest participating regional operators up in the Northwest made a decision to retire. And so we've also been busy internalizing and taking on management of the approximate 90 assets in that Northwest portfolio in the first part of this year. All has gone exceptionally well. The assets that we acquired last year are actually outperforming pro forma by somewhere in the range of 5 to 10%.
What is the outlook for new supply in NSA's core markets?
Well, right now we're seeing muted new supply in our markets. In fact, we track the 3-mile and 5-mile trade areas for all of our stores. Last reported, the new supply deliveries in those markets is down about 300 basis points from what we've previously been tracking. So we're in a very good position with respect to new supply. The one thing I would point out is that new supply in general is a little bit more muted. Where it is being delivered, I think it's in places where it is needed and where demand remains strong, and so we think that what we're seeing right now is good for the industry. In general, I think a lot of people would like to get into self-storage. It's a great industry, and it certainly has demonstrated strength and resilience through the pandemic and coming out of the pandemic. But what I will say is that entitlements are taking longer. Availability of materials and labor is somewhat scarce, and the cost of materials and labor is making it more challenging. So we believe that the delivery of new supply will remain muted at least until the back half of 2023 and likely into 2024.
And as you meet with investors this week, what are 3 top reasons you would cite for investing in NSA?
The 3 top reasons we talk about for investing in NSA include our differentiated PRO structure, which has allowed us to drive sector-leading results over the past 7+ years. Our commitment, and it's very strategic, to Sunbelt, secondary, and suburban markets. And it's been a very good strategy for us, and again has allowed us to deliver strong results over the past 7 years since we came public in April of 2015. In addition to that, I guess the one thing I would say, and maybe you're hearing this from others as well, but because we know and we're very happy with the growth that we're able to deliver to our shareholders, we believe that our growth in core FFO per share will be sector leading this year. We believe that NSA is trading at a bargain basement price right now. We've traded off from a valuation standpoint, and I would strongly encourage anyone who's interested in self-storage to look at NSA very hard.